He's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Stocks are climbing, reaching for the skies. Albert's insights cutting through the lies. Retail dreams standing tall, they rise. In this world of trades, we're the prize. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay.
Hello, 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 hello. What's going on, everybody? Welcome to Our Stock Trades. What's going on? I was going to make a live yesterday. Holy moly, $4.30. What's going on? Woo! How's everybody doing today? Oh my God, what's going on here, man? What's going on? Look at this. In 6 months, we're up 571.42%. What's going on? What's going on, baby? All right, check this out. Shout out to Mr. B-Rad Cooley here, back in 6:39 in the morning. Yeah, we're working, baby. We're working. 6:39 in the morning, he said, and he's been posting this TA, so he's been on top of this. He said, you know, our TA is working nicely. He generated this. This gentleman is a TA whiz. He's like, yep, it's going to go like this, and we're going to go to the moon. And it seems like it's coming true, doesn't it, right? I mean, look at this. Look at this. Let's go, baby. Let's go, right? So if you don't recall, a couple days ago, I forget when, I went ahead and drew this technical analysis, right? Drew the line down here and this here. And I'm like, it seems that it's following the technical. So if you were to just kind of, look at this right now from the technical perspective and just kind of zoom out a little bit and then look at this technicals and just kind of follow the line here. What we can do is we can just extend. Let me just extend this real quick. Let me extend this without disrupting the technical analysis. We can just extend it out a little bit so we can see. Then we go to the 30 minutes and then zoom out a little bit. So this is kind of where we're trading at. We could draw another line, another trend that can go like this, but I don't think that's wise. I think we're going to see where it goes. And then once we formulate more, we should, based off of these technicals, go up to $4.48. So we should see maybe because there is a level. You see this right here? There is a level of resistance here at, was that, yeah, 426, which is why we stalled for a little bit here. And I mean, at this point, based off of this, I mean, it's I don't see any reason for it to. I don't see a reason for it to uh, stop its momentum right now. I honestly don't, unless it's the RSI resets. I just don't see it. So yeah, so I'm very bullish about this. But here's the thing. So uh, look at the month right now. We're making a UE, right? We're making a UE right here, right? If we look at the overall quarter, um, like I said, look at that beautiful U. We're about to make that U. For folks that don't know what I'm talking about, just look at Oscar. Oscar has made the U. Uh, um, to be quite frankly honest, Palantir has made the beautiful U to a point where it's making a check mark, right? So that's kind of where we're at right now, and I would definitely still early in this for sure. Okay, so we're gonna track this to see kind of what's going on here, and ultimately we will see kind of where we're at. But yeah, so we're at $4 right now and 30 cents. Oh no, back to 428. So we're going to be consolidating. Like I said, remember if you don't recall, we were consolidating at the $4 region, and now we're entering that 4 and a quarter region. So this is very good. Okay, very good. We're going to use our AI technical analysis, Monte Carlo sequence, and a bunch of other things. But here's the thing I want to point out. I'm just going to drink some coffee real quick. I want to make sure the microphone's good. All right, happy Friday, everybody. Hope your Halloween was great. Hope everything's doing great. Hello, hello, hello. Any news? Not that I'm aware of. Just technical analysis, right? All right, guys. So check this out. Um, so this is what institutions are looking at right now. They're thinking, what's a good way to look at kind of a calendar or something like that? We don't have to, honestly. We could just kind of talk about it. So, you know how the election is on the 5th of November next week, and earnings is actually the day, I think it's the day after, isn't it? November 6th. So I think stocks are going to kind of rally into the election. And then post election, I think stocks are going to dip down. I think they're going to dip. And then from November, we're going to get our dip in November. And I think that's going to be the buy the dip opportunity. And then in December, we're going to get that rally we're looking for. So I do think there's going to be a short term dip. I still think that might happen. Regardless, I'm not selling any shares. I'm just, this is just like a little my mini prediction. If you look at the VIX dropped 6.48%. Again, the VIX is the volatility index. If you look at the max, VIX usually goes up in times of crisis, like the great financial crisis and COVID. You can see kind of COVID here and great financial crisis, just for people that don't kind of know what this is. But overall, over 5 days, it's still up, right? And over a month. So we could be finding a technical landscape, but it still has some form of a positive channel. It's not showing that it's falling, right? So, what makes it that it just goes up even higher, right? After so there could be some problems, right? So if you don't recall, again, I'm just playing out scenarios here. I don't know what's going to happen, right? What I do know is Wall Street's banking on the fact that we're going to go a little down in November, and then we're going to rebound right after. So ultimately, it's a buy the dip opportunity to shake retail investors out. How you doing, Patrick? Love you a lot. Love you a lot. What's going on? I saw that jump at the open, but no news. Yeah, so just technicals, right? So overall, the the I know the election is really gonna mess up our catalyst, sadly. Yeah, that's a sad part. So what I wanted to do is I saw this post that I'm gonna send to my computer real quick. Um, I saw this post and let me send it on over. Just give me a moment here. Excellent. So I saw this post from uh Donald Trump. It was circulating around Twitter, and this is in his. It's a red check mark, so it's Truth Social. And he said Pennsylvania's cheating and getting caught at a large scale levels rarely seen before. Report cheating to the authorities. Law enforcement must act now. Um. So you know, I think Wall Street. The reason why I was trying to figure out why are institutional investors thinking that that stocks might go down in November because if you look at I think you guys know where I'm going with this, right? So if you look at where if you go back in time to 2000, early 2000 when Al Gore contested the election, you can't hear me? Hello? You can't hear me? Is you guys still hear me? Hold on. Hold on. Never mind. All good. Okay. You guys can hear me? Okay, good. All right. So you don't recall Al Gore contested the election back in the early 2000. And if you look at the early 2000, stocks actually fell. It took a month before the election completion was contested. And that month, the stock market dropped about 5 to 8%. So the reason why I'm bringing this up, because, Steve Jobs says you really can't see the future. You can only study the past and connect the dots of the future. Now, personally, for me, I'm a bit tired of this rhetoric, to be honest. That's just kind of, I guess, my opinion. But again, Al Gore contested it. So I would say if Trump, let's say, does lose this election and there is um, you know, a recount or whatever, and the presidential elect is not called, then it could take. So I'm telling you what Wall Street's looking for right now. Wall Street thinks this is going to take at least a week to 4 weeks until we get the election results. Now, this could be if it's a landslide, then we know from day one. Maybe the next day. I don't know, but I'm telling you what Wall Street's thinking. Because if this election gets contested, expect the VIX to go up, and that's how it works, right? And expect the stocks to go down. This is a buy again. Remember, this has nothing to do with fundamentals. America's not over. It's kind of annoying, but it's an opportunity because it's a buy the dip opportunity. I'm just looking. I was just trying to figure out why does Wall Street think that November is going to be a down month? Because I guess you can look at Al Gore and look at that history. But ultimately, this is very good. We're going to talk about this Bishan. Here, let me see. If you were to look at seasonality, what's the seasonality command? We're going to talk to our AI. Again, you guys have access to this AI for folks that enroll in our platform. Again, use coupon code Main Street. It is going to be expiring this Sunday, so take advantage, lifetime access. The seasonality command is here. So if we go to seasonality and type in SPY, the S&P 500. Wait, am I not? Did I not put it right? It should be SPY, no? Yeah. That's weird. It says it doesn't. Am I not? I'm putting it wrong, probably. I don't even know what is it SPY 500 maybe? That's weird. We'll just put the NASDAQ. We'll put the QQQ. Interesting. That is weird. Now that is something else. I didn't think that, well, because we've done this before. Hold on, let me give me one moment. Let me see if I can figure this out. October 6th. Yeah, I could have. Do you see? That's weird. Yeah, I could have sworn I've done this before. Okay, so it seems as the data is being, that's interesting. Maybe the data is being calculated right now as we speak. So seasonality, you can see here, is calculated based on the data going back last 20 years. So I think it's being calculated. But listen, look at this. So in the past 20 years, if you look at S&P 500, which is like, you know, the best 500 companies on Wall Street, you can see that in November, it's actually a great month for stocks. It's just a wonderful. It's just perfect for the S&P. You make a lot of money in November. Okay. Problem is we have an election, and the second thing is we have a president, former president, that might um that might say that, oh, we need to, there's cheating, and because Pennsylvania's cheating and getting caught at a large scale, levels rarely seen before. I need to, again, I haven't checked this. You know, I haven't Trump sparks concern with claims of fraud. Again, I don't know, right? All I know is if there's a crime, we're gonna get to the bottom of it. But all I'm saying is this when there's an election happening, and this was done October 30th. I think Wall Street is gunning to the fact that Trump may pull this card. I hope, and again, I hope this is not a replay of January 6th. I hope nothing like, just because we cannot handle this as a country right now. There's a lot of wars going on. We just can't handle this right now. Um, but I think I'm just trying to figure out, because like if you look at the data here, we should go up in November. We should go up, right? Today's the first day of November. The VIX is down 6.39%. We should be going up, right, based off of this data. But I think Wall Street is thinking, again, I have access to institutional. There's another tier of data I have access to that I listen to, and they're saying that potentially we may go down in November, post November 5th, because it takes time for the ballot to be counted. Because back then we would know from day one, I think. Um, and then now this, if we, I was trying to figure out, like, why does Wall Street think? Why does Wall Street think it's going to go down? And I think maybe potentially Donald Trump may do this, and I think that is where the market's thinking. But regardless, just letting you know, if this does happen, Wall Street will be buying the dip. And I think if we were, just give me a sec here. Let me kind of show you this real quick. I think, and I just find this, I find this really weird. I find this really freaking weird. Okay, guys, check this out. Check this out. If you look at smart money, dumb money, you remember when the stock started to go down? Remember that day it went down? Again, obviously it's rebounding right now a little bit, but you remember it went down? What did dumb money do? Again, dumb money and smart money. So how is this calculated? Let me, for folks that are new, that don't know what the hell this is, listen. If you have over $100 million, by law, you have to report your buys and sells. Clear? It was it's a Senate thing, $100 million SEC. I think it was in 1976. There's ruling, something where you have, if if you have an investment over 100 million or more, you have to do a 13F. Okay, so we can track big money. Problem is, how do you track? So big money, Wall Street is considered smart money. Dumb money is retail investors. How do you track dumb money? Well, you use Robinhood, and you use Webull, and you use all these things, right? Charles, I can't speak. Charles Schwab and whatnot. So you have under 100 million, right? And So what they do is they sell your data, and I buy that data, right? Well, there's people that buy the data, and I buy the data from them, right? And that data is telling me that so when the stock's going down, dumb money's going to sell because that's what dumb money does. I mean, you saw dumb money sell at 60 cents for Clover, and we were smart money because we had the data, and we were, and that's why we're rich, right? So what I think is going to happen, this is the trend starter. I think, and again, I don't know. I can only look at the past. Has Donald Trump, did he want to do some funny business with the VP Pence in the past? Yeah. Again, sadly, I have to get a little political right now, which I know is not the best, but this directly impacts the freaking stock market. So I have to. I have to go there. So Trump has a behavior of saying, okay, I'm going to contest the election. Okay. So if this were to happen, then this will be interesting to see, right? Especially how JD Vance responds to it, assuming he loses, right? If he wins, then I think I we may still fall for a little bit, but it won't be a heavier fall, um, like if he was to contest the election. Because if you go back to Al Gore, he contested, and then it fell 8%. Okay, 8% is a lot, right, for the S&P, right? And the reason why I pull this graph up is because because remember, when stocks go up, smart money stops buying, right? Because smart money, remember when stocks fell here? Smart money blue, again, smart money is blue. You can see here, smart money bought the dip. Remember that in August? Smart money bought the dip. Okay. Dumb money sold the dip. All right. Then dumb money, stocks went up, dumb money buys. Right. So what ends up happening is if we do go down 8% or whatever, smart money, you're already starting to see it. The S&P started going down. Dumb money just says, I'm out of here. Right? Because that's what they do. This is just what they do. And smart money, because they've been going downward, they're starting to percolate up. So the question is are we going to fall down more to where you're going to see all these headlines, and then smart money is going to start picking back up, and we're going to start getting this? So that's kind of, and then in December we get that rally, and maybe in January as well, and then dumb money picks it back up again like it does always in the past, and then it goes on top, and smart money starts going on bottom. So again, I'm spending extra time on this just to kind of prep you, just so you have access to this data, just so you know what Wall Street's thinking, okay, regarding this, right? And again, I don't know why they're thinking this way, but I'm thinking potentially it has to do something to this. I think. I don't know, right? But correct me if I'm wrong, crucify me. I'm giving you what I think, right? And I could be wrong, right? I hope I'm wrong. I mean, right? But if I'm right, we get a buy the dip opportunity. So that's great, right? So it works. But if we get a buy the dip opportunity, it means our democracy is being tested again. Which I mean, yeah, hope it's tested in an organized fashion, not like what we've seen before. But yeah, let them panic. I go hunting. Exactly, right? So you got to look at it from a Wall Street perspective. And I hope nobody gets hurt because, we have people get hurt. So hopefully nobody gets hurt. Okay. So that's all I had to say for that. Let's see what's going on with Clove. Oh man, 424. Maybe I need to stop. Maybe I need to stop talking. No, I'm just kidding. Right. So let's see kind of where we're at with the technicals here. 5 minutes. Yeah. So this is still trading within that channel. This is nothing too crazy. Okay. Nothing too crazy. So overall, there's that. So we went ahead and talked about overall the election, smart money, dumb money, the VIX. Now let's go ahead and we talked about seasonality, which is really good, right? So now let's talk about AI projection. Okay. And then we'll go ahead. Okay, algo flow. Okay. So let's go to algo flow again. For folks that don't know, this normally costs $100 a month, but it's part of our. If you go to other platforms, they just charge $100 just for this. It's already integrated in our platform. It's included, especially in lifetime access. So algo flow gives you kind of what institutions are doing. Algo is the green line, and the stock price is the gold line, right? So you can see that we're going up. right? Which is which is why we've been going up, right? So from this perspective, and that's why a lot of folks in our stock terminal, they're able to look at this for other stocks. So they have they have extra layer of knowledge that, let's say, a person that just has Robinhood or Charles Schwab or whatever doesn't have, right? And that's where the institutionally graded data helps. Okay, so this is bullish. Okay, now let's go ahead and take a look at the Monte Carlo sequence. 30 days, kind of, what it thinks things are going to do. So look at that. Let's look at the simulated projections here real quick. Look at Clove. Nice. Look at this. Okay, so right now we're down here, and this thing is closer. So it looks like we're gonna get to. So we might get to 450, 470. In fact, that's what B-Rad Cooley was thinking. Right, we might even hit 5. Who knows? 470, 480. We don't know. Right, and then we might get the buy the dip opportunity. But again, this all corresponds to fundamentals. If they release another quarter of just crazy free cash flow, then let me subtract from the 30 million that they have to pay off. But let's just kind of assume how far it could go before it could dip. We could play that game. I don't. Again, historically, from last quarter of Q3 of 2023, not 3 of last year, they didn't do that well. So the question is, but they did have ACO that year, so I think it'll be better. But we'll see. But if, let's say, the trend continues and they pull a Houdini and they have 44 million, I don't think they will, but if they do, let's see how far this can go. And let's say they grow at 11%. If they grow more, then obviously it'll go higher. If they grow less, then you already know. So 44 plus 44 plus 25, right? That's 113. You put 113 here, you go 10 years, you put 11%, and then you go ahead and put 496. I mean, this thing we could jump up to near the $5 range. So right now we're at the base. So the market potentially is assuming a 44 for the Q3 for that base case, and if once it releases, we could go as high as 550, right? We could go as high as that, right? It depends what they release, right? So we could go near there, right? Maybe 530, 530. We could do that, right? But again, and then we might get our dip in November, and then the buy the dip opportunity in December. Sorry, the buy the dip opportunity in November, and then we get the rally in December and post. So we could. And again, for folks that don't know this, as of right now, the overall covered call market is paying 9.43%. You multiply that by 12, it's paying 113% per year. So you take 113%, you say 1.13, multiply it by 4.24, and you add this to it by subtracting this. It's expecting in 1 year, the covered call options market is suggesting that this thing can go to $9, give or take, plus or minus 2, mostly minus 2, around $7 to $9. So we are going to start seeing potentially covered calls in that range soon. Let me check if it's even there. We could start seeing it. Let's see. Let me see, covered call. So we're seeing $7 covered calls now. So this could update to give us $8 covered calls in the future. So we'll see, right? I'm not too sure, but we'll see. As of now, we got $7 calls, which is pretty damn good, right? A $7 call now is paying 18 cents per contract. So I mean, I got people that we got around, like, let's say 300,000 shares. Yeah, that's pretty damn good, right? So that's kind of what it's thinking from a year from now, right? And I need to get that helicopter hat. Sadly, it's in freaking Phoenix. Isn't the Monte Carlo based on the normal? Well, the thing is, it takes in all of the past information that has happened to the stock, and it goes in and looks at beta and looks at the overall implied volatility. It takes in all that into account, and it graphs the most reasonable line. Right? That's how it does. Okay, so there's that. Yeah, and I mean, and honestly, that's it. So it's recalibrating now. Ultimately, we're up 560%. For folks that are like, I don't believe in the stock market, I don't think this is going to go. Again, Carvana has high revenue, but if we do return to growth, we could see something like this. But just look at just kind of the you know look at from the bottom here. You know, 5,692% increase. In fact, the low was around $3 something, I think. And if you would have put in $14,000 in Carvana back when it was at its low, you would have $1,000,000 now. So $14,000 investment in Carvana back in its low, you would be a millionaire. You would have $1,000,000 now. So stuff like this can happen in the market. You know what I mean? And you remember when people used to like, oh, I don't believe this thing's going to go up 5,000%. Well, stocks do that. They do, right? And some stocks go up even higher. I mean, look at Enphase. Look at Enphase here. Go down to when it was around 70 freaking pennies. This thing went up 44,000%, not 5,000, 44,000. Okay. So there's a lot to look forward to. For folks that are interested, our Main Street coupon code is expiring. So for folks, thank you for joining. Some of you guys are forgetting, but when you go here, regardless master or bundle, depending which one you want, this is just an extra course. They have lifetime access to the stock terminal. Both of them do. So if you want lifetime access, one-time purchase, just make sure when you do this, because people are not doing this, and people are not integrating too. So make sure you integrate. You go here and you go type in Main Street. And then you hit enter or you hit the button. You do that, you get an instantaneous $600 off. So take advantage. I don't know why you guys are not doing it, right? I have to retroactively put it, which sucks. This expires in 2 days. So take advantage. This expires in 2 days. 2 days and 13 hours. So take advantage of this, and I hope to see you on the platform. Again, use Affirm for all my Canadian and United States members, or PayPal for international folks, right? And you can do interest free, which is six monthly payments, or 36 months, right? And if you do a covered call strategy, that's 15% per year. So if you take 15% per year divided by 12, that's about 1.25% per month. So if you do a covered call strategy, you make around 9.43% per month. 9.43%, this is why, this whole thing, once you understand this, you understand how to print cash, and then you start realizing the scam that, our educational system has taught us, right? There's so much. People on the stock terminal are starting to realize, I'm showing them kind of what I'm doing, and we're just literally printing cash, right? And I think people are starting to realize that, oh my God, once this thing hits intrinsic value at I don't know what value is going to be, maybe $40, $45, maybe $90. I'm not too sure. I need more data, right? The more data I get from Clover, especially with its return to growth phase and its SaaS, which I don't have any understanding of in terms of the numbers yet. Just bits and pieces from different meetings from Peter. Once we find the intrinsic value, just for the purposes of this discussion, imagine it's $40. Then, oh my God, right? People are realizing, like, holy crap, I can literally make this much money per month doing covered calls and cash secured puts. Is this really how my life is going to be like at this point? Yeah, pretty much, right? Obviously, if the stock goes down, you got to be careful. Mm-hmm. But we purchased at around 60 cents, right? So we're good. And then the next level is to diversify, right? I think this is a great example. Just let me go ahead and play it real quick, and I'm going to narrate it real quick here for you guys. Oh wait, that's not it. Let me go wrong. You know what I realized? There's a little hat that this thing's wearing. It's kind of like reminds me of my hat, my helicopter hat. Oh, there was a video I said. So I can find it. Real quick. There it is. Here it is. There it is. Okay. So let me just mute it real quick, and we can just kind of do it. So let me fast forward. Okay, good. So what he said is, he said, can I have this piece of paper? He gave him a pen. He's like, no, I want to rip it. He's like, what? He's like, okay, never mind. Sorry. He doesn't know this example. All right, guys, let me kind of tell you. Oh yeah, but once again, not everyone purchased at 60 cents. Well, again, I didn't come online when I wasn't there when people purchased at $15 to $20. So again, I'm talking to the people that are in our platform. A lot of us purchased at 60 cents to 70 cents to $1, right? And some people purchased at $8 to $10 and they went heavy at around 6 cents. So I'm speaking to the people that are in our platform that have joined earlier on, that are up a lot. So again, I'm sorry, but again, I can't. My comments can't reflect your again, and they shouldn't reflect you because I'm not a financial advisor. This is not personalized financial advice, right? People have averaged 260. But there's some people that bought at 60 cents, and people that join our platform because we have access to all this data. We knew when to get in even heavier because we knew it was at book value. Anywho, I got in at 77 cents, but I bought all the way up. There it is, right? 249,000 shares. Probably nobody bought for the first time at 6 cents, but most of us doubled down or tripled down close to that, which means we are still good, which is exactly what my point is. So, it is what it is, right? So thank you, JC. Hey guys, that are participating in the chat, post your averages. There it is. Awesome. So they have both averages. So let me explain what Shaquille O'Neal. I actually respect Shaquille O'Neal. He did it right. Just FYI, he's worth a $500 million, I think, right now. Okay. In terms of his financial worth, not his human worth, right? Because those are two different things. So he said, for all the young brothers that are watching, here is a piece of paper of the money you make per month. Okay. Okay. So what you do that is you go in and you take and you rip half. Okay. You rip half of that. Okay. Then you take that half and you save it. You save that half. Okay. All right. Then you invest it, you save it, whatever. Okay. Then you take this half. Now, some people go ahead and they just live it up with this half. This is the half that they're going to ball out on. But he said the billionaires, the smart people of the smart people, the ultra successful people, what they do is they take this and they rip it another half. Okay. And then they take this half and then they take it and then they save that or they invest it. Okay. And then this one here, this little thing. So what do we rip off? We ripped off 75% of a paper. So 75 is being saved, invested, and then we're balling out with 25%. That 25%, get yourself whatever you want. Okay. So this is kind of the situation here. Okay. Ball out, get yourself a car, get yourself Rolex, get yourself whatever you want. Okay. What I do now, again, this is what I do. Okay. So now let's go ahead and go backwards here. What I do is I take the full piece of paper and I invest 100%. I invest 100% of what I make. I don't take $1. Okay. So I take 100, I take the full paper and I invest it. And then 25% of that I do cash secured puts and covered calls. And then that gives me a new piece of paper, right? And then I take that paper and I take 80% of it and I reinvest that into the market, right? Into that pile where I'm doing cash secured puts and covered calls, right? Then I take that 20% and I live it up on that. So the best way to explain this, because sometimes this can be different, because this is like really we're going deep here. Okay. So in terms of like, how you can really make money, right? Because most people just spend the money they make and then they end up losing it all, which sucks, right? So let me go online draw tool. I don't know. I'm gonna see. Maybe I can find somewhere. Oh, we've used this before. Look at that. Oh, this is genetics. It still remembers my genetics. How do I remove it? What's the, there it is, new, create. Okay. This is good. Okay, we'll use this one. All right. So what Shaquille O'Neal said is he takes a piece of paper, he cuts it in half, and he invests the half. And then he cuts another one of those and invests the other one, right? That's what the ultra rich do. Well, I am cheaper than the ultra rich, right? What I do is I take all of it and I invest it. Okay? Because I'm young. Again, I'm using a mouse here. Actually, you know what? Screw the mouse. What I can do is I can put text. Can I? There. I invest 100% of it. Okay? I take that and I invest 100%. All right. So then now I have 100% invested. Okay. You following me? I have 100% invested. Okay. So then from this investment, I go in and I take this much, which is 20%. I take 20%. Okay. I take 20. Sorry, guys. I'm trying to make this nice and organized for you guys. It's kind of annoying. I take 20%. Okay. And then this is not financial advice. This is what I do. So now this 20% turns into, I look at it as a sheet of paper. This is the 20%. Okay. This 20%, I go ahead and I do covered calls or cash secured puts. Okay. So covered calls and cash secured puts. So I go ahead and I take this 20%, right? So we'll just go ahead and do, right? And then this is going to give me money. Okay. So this is going to give me now a sheet of paper. Okay. Now I take 80% of that. Let's do it a little better. I take 80% of that, which is this. And I take this and I reinvest it back into this pile. Then I take this 20%. I take 20% of this. Okay. Hold on. I take 20% of this. Are you starting to see the system here? Right? I take 20% and then I can do a couple of things, right? But this is when we are going to be starting. Hold on. Homes. This is going to be the real estate business. Okay. Real estate business. Am I using any of this money? Not really. Okay. It's all investing, right? Now, maybe I may do 19%. Right? And then for me, 1% is, and I'll explain this whole thing again, is joy. Al, how do you live? How do you live and whatnot? Through my normal work, right? Because I'm not retired, right? All right, so let's go ahead and let's explain this. And I hope you guys are listening. Okay, so now let's go ahead and see this system. Okay, I take the money, I go in and I invest 100%. 20% will be cash secured puts and covered calls. This is going to give me monthly premium or weekly, depending what you do. And then I take 80% of that and I bring it back to here. Why do I bring it back to here? Because I'm compounding it. Because this now I'm going to earn premium on it. And I keep compounding. And then this 19%, I buy homes. So I'm quickly diversifying. So the original investment now, how it keeps going. And guess what? As Clover and whatever all the investments I make, as these keep going up in value, right? This gets bigger, right? Soon, I do a cut to where now this here is just going to be held to where this 20% now is getting bigger from this, which ultimately makes this bigger, which ultimately makes this bigger, which then makes this bigger. Are you seeing this? Are you seeing the magic here? So I'm only touching 1%. Now, again, you might say, man, 1%, what kind of life is this? Well, later on, the homes are going to give me money. And once the homes give me enough money, then this will increase. Because I'm not in control of the overall market. I'm not in control of Russia, right? I'm not in control over China invading Taiwan. Okay? But I am in control over the housing market in terms of my tenants. This is my business, okay? So ultimately, this will start going up, okay? And I will touch this money, which is backed with all of this. And guess what? All these homes will be bought cash, okay? So this is the overall schematic here, right? And I think this is a really good strategy. This is what I'm using. Your strategy could be better. But you can see how sexy this is. You can see this. This is a very elegant system. Shaquille O'Neal says, cut half, cut another. And no, invest 100. Let it poop you money. And then don't use that money. Let that money poop its own poop here. And then take that and make it into a larger pile. You get what I'm trying to say? Billionaires, what they do is they don't spend their original source of money. They spend their second source of money. What I'm doing is there's levels of orders here. Okay. Right. This is level order number 1. All right. This is level order number 2, level order number 3, level order number 4, and level order number 5. 4 to 5 levels of protection. Okay. 4 to 5 levels of protection. So just in case, if this goes to hell, now you have a different diversified business that you'll be able to be successful on. Okay. Obviously, risk management, you won't let this go to hell. But you see this? So this will be the next phase of the, we'll be establishing a new platform for home, for the real estate section. It'll be a brand new course. It won't be mastering the stock market because this is not stock market related. It's a whole new platform. Okay. But you can see the overall mission here, right? So the questions you have to ask yourself is, do you want to be part of this journey or do you not, right? And I'm going to be sharing you guys my journey, part of, in addition to the over 2.5 billion outputs of institutionally graded data, right? So it's pretty much mastering the poop market. And again, that's what it is. Because the problem is, I have a lot of friends that do this, and you may be guilty of this. I mean, I sure was when I was young. You get some money and you spend it all, and you got to wait until the next paycheck. I mean, it's a common American dance that people play, right? So you can see 1% is for joy. Now, someone may look at this, and someone might say, this is disgusting. What are you doing? What do you do? So for me, I say joy. When I say joy, I say you live off of. But for me, I find all this enjoyable. I love the system. And soon there's going to be another one. It'll be homes. It'll be like maybe golf courses, hotels, and whatever have you, whatever business and ventures you want to get into. And it's just, I think this is a beautiful schematic. And, okay. Okay, let's play it out. So let's say the stock market has a recession. All these stocks drop. So what do I do then? What do I do? We've talked about this many times. So let's use can we change the color here? Whatever. That's fine. We'll use the same color. I pull money out because the interest rates are going to drop. And guess what? Then I pull money and I invest. And I put money in the market. Who pays for the homes when I pull a loan out? My tenants. My tenants. So you see the system. You see this beautiful and this can only happen if there's a recession. Why? Because if there's a recession, then all these stocks drop around 50%, sometimes 90%. Home prices don't drop in value. You can argue the great financial crisis, that's not going to happen again. Okay. And if you think that it does, go ahead and I wish you success. Keep waiting. Right. Don't move and stay stagnant in society, right? As people pass you on. That's my that's good luck. But from this regards, uh, interest rates will drop. I pull money out of these homes because these homes are going to essentially increase in value from the 2% inflation rate, right? And then I take money out and then I buy when there's a recession. And then I will never give money back to the bank because these interest rates on these HELOC loans will be 2 to 3% on average, right? Assuming we drop interest rates to 0%. So the tenants will be paying off my mortgage to get me ahead, right? I go in and I invest in all of that money I pulled from cash secured puts and covered calls, right? And then I do the whole process again. And then I take this and then 20% of it will go to cash secured puts. And it's a cycle. And what is this called? This is called a positive feedback loop. This is a positive feedback loop. Now, some of you that are astute may have already have known what this is. Let's call it out. This is called an Amazon, what's it called? A wheel cycle business model? Something like this. I think Amazon created it. There it is. Okay. He focused a lot on customer experience, traffic, sellers. You created a wheelhouse. Guess what? Does Clover have one? Yes, it does. Any successful business does. Mine is just this. It's just investing. Now, you might ask yourself, why homes? What are you doing? Okay. Well, first off, let me show you. What the hell is Berkshire Hathaway? Right? It's Warren Buffett. It's a stock market, right? Wrong. It's a conglomerate. Don't you know that Berkshire Hathaway has a home service business? Don't you think Berkshire Hathaway does homes too? How do you think I learned it? What do you think I learned this from? Why do you think Berkshire Hathaway does homes? Huh? Come on now. Right? All right. So now we're I hope that now you're starting to see the vision that I have. Okay. And the beautiful part is this vision I want to share with all of you. Now, again, I would give this for free, but personally, the data is expensive as hell, and the whole platform doesn't pay for itself. So you're essentially paying for the platform. So take advantage. These prices will be going up in the near future. I think in 2025 we'll be increasing prices. So take advantage of this, right? Oh yes, remember Charlie Munger said saving the first 100,000. It is terrible. It is painful, very painful. Okay, let's see here. Let me go. Al, don't BS me. Clover Health with collaboration going to disrupt the dinosaurs healthcare model in Europe. Oh, I again, not financial advice, but I mean, we're already starting to see it. Let me see. We got a lot of comments here. I got to see what's going on. Oh yeah, 747 Boeing is going to happen right after we just. We'll do the technical analysis right now, real quick. Let me see. I'm drinking coffee. You are set for life, pretty much. Be inspired by more. Be Rob lit it. Yeah, I'm done buying. I'm retired now. That's it. We got some retirees coming in. I would need. Oh, okay. What the hell? I was 190K. He was on the platform and showed his account, and I was like, "Gotcha, got to catch up." Okay. There it is. B Rob has the patient stomach Jedi. Let's do this. Medicare Advantage. One of our platform members believes we call him the sniper. He's the sniper. You know, it's funny. We have our own little Halo Spartan Elite System group. Belize is the sniper, right? He found that Aetna and I think Centene has stopped paying commission to some Medicare Advantage type insurances. And what's going to end up happening is if they stop paying commission, then if I was an insurance broker, I wouldn't, why would I sell, maybe you might still out of ethics, but if you're going to, but you got to make a living. You can't work for free. So you're going to basically go ahead and, sell insurance companies that actually respect you. Because if they respect you, then they respect the patients. That's kind of the argument you can say. Word on the vine from all the insurance brokers that are talking in the New Jersey market, they're saying that they are selling a lot of Clover, right? So I'm very excited to see what they report. So it'll be good to see, right? All right. Let's see here what's going on. I love you. I love you, Patrick. Oh no, I love you. I love you. All right. So get there no matter what you have to do. Absolutely. You gotta get there. Okay. Whatever you have to do. Uber, whatever. Okay. So Uber Eats, do whatever you can. All right. So there's no shame in that, right? The only shame is you not trying. What was I gonna say? Yeah, and be patient, 100%. So let's see, where's Clover now with all this yapping? 422. So it looks like we're about to start another cycle of going up. So that's good. Just from just kind of just looking at this, it kind of seems like, but I don't know. Um, Give me a moment. There it is. Okay, so Clover, let's look at the week. Well, let's look at the hour first. Let's look at the day. So the hour is not helpful. Let's look at the week. Now, okay, the day is not helpful. So let's look at the week. There it is. Oh, well, that's interesting. Remember how it used to say 419? Now it says 392. Ladies and gentlemen, I don't think we're going to see below $4 anymore. It sure seems like a strong level of support. We'll see. We'll see. But look at this. All right, ladies and gentlemen, I'm proud to say we are headed to 747, right? In the next year, we should be touching 747 or close to near there, right? We're going to hit unless the whole world blows up, we're going to hit 747. It's going to happen. It could be a year, it could be two. It's not if, it's when. It's going to happen. So we're about to get near there, okay? Right? So I don't know when. Who knows? It could be next week. I don't know, right? So we'll see. Very excited. This is very good news. All right, look at this. You see this here? I mean, look at this. This is once it hits, there's your U. There's your U. And then it goes ahead, does a nice dip, and then it goes ahead and gives you that cup and handle effect. And then we're gonna go off to the freaking moon, which is exactly what B-Rad Cooley is basically looking at. There's your cup and handle. Imagine you get formulate a bigger cup, a mega cup, and you get your handle, right? So then we're going to go to Boeing 747. It's funny. I typed in Boeing on the GIFs and it showed a burning plane. I'm like, oh God, oh yikes, So, but yeah. So isn't this beautiful? Isn't this such a beautiful system? I mean, this is just beautiful. I want to take this. I want to take a screenshot, and I want to print it, right? Right. And if I was to show this to somebody out there in the real world, they're going to look at you like this is too good to be true. Right. But the problem is none of this would have worked out if you didn't know how to invest. Right. None of this would have worked out if you don't know what fundamental analysis is, what technical analysis is, and what options analysis is. Are you starting to see level 1, level 2, level 3? Now this is going to be level 4, which is the homes. Are you starting to see these things? Right. It's beautiful, isn't it? And you are going to see it in real life on this channel. Isn't this amazing? Right? So for folks that have not yet joined yet and that want to be part of the Lifetime Access family and crew, here's your chance. Okay. All right, ladies and gentlemen, it's a pleasure and honor. I will see you on the next one. Let's see here. We are showing debunked tweet from Trump. Oh, so it's debunked? I have no idea if it's debunked or not, right? It could, if it's debunked, it's debunked. I have no idea. But again, has he contested the election before? Yes. Has Al Gore contested the election before? Yes. What happened to the stock market? It dropped. That's why I talked about it. People can get emotional regardless. I'm just speaking from the perspective of the stock market. And I'm trying to put a name on why Wall Street thinks that we could drop in November, because it's looking pretty sexy right now. But again, so don't shoot the messenger, right? This is, I'm just giving you what word on the street is looking at, right? And you take it from there, right? All right, ladies and gentlemen, it's an honor and privilege. I will see you on the next one.